Hi everyone, my name is Harsh Srivastav, and in today's video we are going to look at why investing in the US stock market makes sense, what are the ways through which you can invest in the US stock market, and finally what are the things that you should be careful about before investing in the US stock market. If you are new here, then do subscribe to this channel because I keep coming up with these kind of interesting personal finance videos. So without any further ado, let's get started. Does investing in the US stock market make sense? Well, let's see. A basic rule when one starts to invest his money is to have a diversified portfolio, because otherwise, if all your money is concentrated at just one place, then you can lose a lot of your portfolio's value by a correction in the financial instrument where you are invested in. And so, to avoid this kind of a scenario, you can choose to invest in the world's largest stock market alongside your current investments in the Indian stock market. Now, what it does is that it increases the diversification in your portfolio while simultaneously reducing the downside risk. Now, you may ask, how is the downside risk reduced? Well, because first of all, the US stock market has performed way better than the Indian stock market in this last decade. And secondly, the US stock market is much less volatile than our Indian stock market, which means you're getting higher returns but at a lower risk. What more can you ask? It can't get better than this, right? Well, no, it gets even better than this. Let me tell you how. See, when you invest in the US stock market, then the returns that are generated are a combination of growth in the stock market and currency appreciation. To give you an example, let's say 3 years prior, you had invested in the US stock market and you made X% returns from the growth in your investments in the US stock market. Now, other than that, you will also get an additional return of 14% because from 2020 to 2023, the dollar has appreciated by 14% in comparison to INR. So your total return will be X% plus 14%. Now, of course, there will be dollar to INR conversion charges as well. But where I need you to focus right now is that you are getting an additional return because of the strengthening dollar. Now, the story doesn't end here. Let me give you another reason why investing in the US stock market appeals to me personally. The thing is that the US stock market gives really interesting investment opportunities to us Indians. To begin with, the US stock market is a house for various mega global corporations. I say mega because the products of these huge corporate entities are used by people all around the world. And I would personally bet my money on these global corporations to compound my money. Which companies are these? Well, these are the Microsoft, Apple, Amazon, Nvidia, PepsiCo, etc. Other than this, there's also an opportunity to invest in promising companies in their early stages because of course, the world knows that US is a center of global innovation. You can literally find various fundamentally strong companies which might do really well in the new age technology space such as AI, ML, cloud computing, cybersecurity, etc. Now, let's say you're convinced that investing in the US stock market is not at all a bad deal. But the next question that arises is, how do you invest in the US stock market? Well, you have got both direct investment route and indirect investment route. Under the direct investment route, you can simply choose to open an overseas trading account with an international broker such as Charles Schwab, Ameritrade, or Interactive Brokers. Now, definitely opening an account with an international broker is going to require a lot of paperwork and verification to be done. And so, if you're not comfortable with an international broker, you have another option as well. You can open an overseas trading account, but with a domestic broker. Which domestic broker am I talking about? Well, there are various trusted names such as HDFC Security, ICICI Direct, Kotak Securities, etc. Now, some people will also tell you that you can open a new demat account with NSE, International Financial Service Center, which is commonly regarded as NSE IFSC. But the thing is that you wouldn't actually be buying shares, but depository receipts. And depository receipts are basically derivatives which derive their value from an underlying share. Also, you'll find depository receipts of very few stocks to invest in. And at the same time, you should keep in mind that the liquidity of depository receipts is not the same as actual shares. So this is why I don't recommend this particular direct investment route as of now. Now, moving ahead, let's take a look at the indirect investment routes. Indirect investment route is suitable for people who don't have the time or lack the knowledge to do individual stock picking. One of the ways would be to buy mutual funds that invest in the US stock market. What it does for you is that it eliminates the need to open an overseas trading account, and so you don't have to maintain any minimum deposit which is required in case of a trading account. Another way under the indirect investment route is to buy exchange traded funds. Now the next question that should pop in your head is, how do you buy ETFs? Well, let me tell you how. You can either buy US ETFs from an international or a domestic broker, or you can buy Indian ETFs of US indices. Now see, both mutual funds and exchange traded funds are a great way to gain exposure to the US market. But in my opinion, exchange traded funds are slightly better than mutual funds. Why? Because of the sole reason that the expense ratio on exchange traded funds is much lower than mutual funds. Lastly, you can also choose to invest in the US stocks through the new age investment apps. But you need to keep that in mind that due to regulatory requirements, some of these apps will not allow you to do intraday trading. Now the last thing that I want to cover in this video is what things should you be careful about before investing in the US stock market. The first thing is currency conversion charges. When you buy securities in the US stock market, then you will have to bear the INR to dollar conversion charge. And when you sell those securities, the dollar to INR conversion charge will be applicable. The next thing is the brokerage charges. You should aim to open an account with a broker where the brokerage charges for buying and selling of shares is the lowest. Moving forward, you should be aware about the latest foreign exchange rate, because how many units will be allotted to you and at what cost is determined by the existing foreign exchange rate. Now there is also an investment cap for Indian investors. As per RBI's liberalized remittance scheme, an investor cannot invest more than $250,000 in a particular year. In INR, this exceeds 2 crore rupees, and so it won't create much of a hindrance for most of us. Lastly, you will have to take into account the taxation aspect as well. You will have to pay tax on the capital gains that you make, depending on whether those profits are made in the short term or the long term. Simultaneously, dividends in the US are taxed at 25% for Indian investors, and so to avoid double taxation, you can claim foreign tax credit in your domestic tax filings. To conclude, investing in US stocks is really great for people who are already overexposed in the Indian stock market and are looking to diversify their portfolio for higher returns and lower risk. Hope you found this video helpful. Thank you so much for watching. Like the video, hit that subscribe button and stay tuned for my next video.